very common misconception amongst the millennials or even amongst the female investors is that you need a lot of money to start investing, right? But that is not the case, right? For example, millennials whereby they mentioned capital is limited, you can always start smaller. You heard of the power of compounding, right? So sort of like by putting in an amount that you're comfortable with, small amount, monthly, quarterly, or annually, right? So we always encourage our peers, millennials, to actually start with buying small units. And to be honest, like REITs and ETFs are great ways to begin for millennials who actually lack of capital to invest, yet would like to also get some stable yield.
Generally, we have financial analysis, called FA, and technical analysis, TA. Okay, but two is always better than one. Both TA and FA, they cater for different purposes. In terms of TA, it not only to help you to time the market entry, but also provide you a better picture when you should take profit if the stock hits certain target price, or when you should cut loss if reached below support level. That's what we call the exit strategy. And fundamental wise, it's also quite straightforward. It's categorized into two parts. First one is like value investing. For value investors are usually more prudent. They typically buy into strong companies which are more stable and well-known, for example, the blue chip stocks. The backdrop of this kind of strategy is that investors believe that the company is undervalued now after they went through the company's financial results, annual report, etc. They believe at this juncture, with current trading price, it doesn't reflect the company's intrinsic value or true value at the moment, which could generate a potential upside in the future. So the growth of these kind of companies may not be substantial year on year, as they already reached to a certain mature level. But on the other hand, for growth investing, it's suitable for more aggressive investor who is looking at high growth company. Such company may not be fully familiarized by most of the market participants, which is also kind of under radar. While the company is still growing or for further expansion, you will be able to see more significant changes in terms of the company's sales revenue, growth rate, as well as their margin. Okay, and this could potentially derive a higher fair value from their current trading price.